the best of Money Matters. Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares inched higher today as Asian markets started the week on a positive note. So if you look at the Straits Times Index, it was up 0.22% at 4,275 points at about 2:26 p.m. Singapore time, and that's with a value turnover of some 937 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI ended slightly in the green, up 0.09% at 4,269 points. Now, in terms of value turnover, we're looking at 1.72 billion Sing dollars. Gainers outnumbered losers 355 versus 244. Top advances for today we've got for you ST Engineering, DBS, and Hong Kong Land USD. And top decliners we have here CMS, Singtel 10, as well as Singtel. Now, in terms of counters to watch, we do have Yangzijiang Shipbuilding because the shipbuilder on Saturday announced that 3 of its subsidiaries have cancelled contracts valued at $180 million with an unknown party. Now, elsewhere, from what an inline personal consumption expenditures price index reading out of the US for August meant for investors to how gold surpassed the key $3,800 per ounce level for the first time, we've got more international headlines in focus. And also on deck, more on CapitaLand, commercial C-Reit, and Sony Financial Group's trading debut in Shanghai and Tokyo, respectively. Now, let's break them down with my guest for today, David Kuo, co-founder, The Smart Investor. Mr. Kuo, how are you?
I'm very good. It's me again. Yes, Monday.
I'm just going to put these two questions together. The PCE Price Index, 2.7% for August, up from 2.6% in July, largely within expectations. On the other hand, we saw gold hitting the 3,800 key level. What does this mean for market participants, and really how have they reacted thus far?
Okay, so let's have a look at that PCE data first of all. Just because it has come in within expectation doesn't mean that it's okay. I mean, that 2.7% rise in the PCE, which is the Fed's favored inflation gauge, is still higher than the one that they reported last month. So it means that inflation is moving up, and there is no sign whatsoever that inflation is coming down. But it is really that goods price inflation, the food inflation, that I think American households will feel the most. And that is rising right now. And so that, I think, is a worry for American consumers. And then we also have to remember that many of the suppliers have not passed on the tariff increases yet to consumers, not fully passed on. They passed on some of them. So I think the outlook for inflation is not particularly good in America. And given that, it's going to be very difficult for anyone to try and second guess what the Federal Reserve is going to do. Gold prices, on the other hand, yes. The part of the market thinks that interest rates are going to be heading lower. And if interest rates do head lower, then there is a strong likelihood that people could pile into gold because they think that holding gold is going to be less expensive. The holding cost is low, and so therefore gold prices are going up. And that could be their hedge against inflation, because many people believe that gold is a hedge against inflation. And so I think that is really what is going on in the American market. They don't quite know what the Fed will do. They know that there is inflation in the system. They think that the Fed may be forced to cut interest rates, and that is why people are piling into gold right now to try and preserve whatever wealth they have.
And if we look at the Singapore stock market as usual, Mr. Kuo, how would you assess the STI's performance today and any surprises when we look at the biggest movers?
Okay, I think the Singapore market is kind of trapped in limbo right now. If we have a look at Singapore's 3 biggest banks, one was up, one was down, one did absolutely nothing. But then if we have a look at some of the cross-section of the real estate investment trust in the STI, we see companies like Mapletree, Pan Asia Commercial Trust, Fraser Centrepoint Trust, CapitaLand Integrated Commercial Trust, which owns Plaza Singapura. They were sharply unchanged, 0%. And so I think Singapore investors are kind of sitting on their hands, just like I suggested earlier on, that we don't know what is going to happen to interest rates. If interest rates they believe are going to be higher, then of course the banks will do well. If they believe that interest rates are going to be lower, then that could benefit the real estate investment trust. But the fact that they don't know, or they can't try and second guess where interest rates are going, that would explain why those counters, those bank and real estate counters, are doing absolutely nothing at the moment.
Struggling for direction, I suppose, Mr. Guo. If we zoom in on some of the companies to watch, we do have Yangzijiang Shipbuilding, because on Saturday, the shipbuilder said that 3 of its subsidiaries have cancelled contracts valued at $180 million with an unknown party. How significant of news is this for investors if we look at the counter's share price movements today?
Well, it was quite significant early on in the market because the shares were down about 6%.
Yep.
And then the company came out and explained what was going on. It said that 3 of the ships that were being built at the moment were secured to try and circumvent U.S. rules and regulations. And Yangzijiang Shipping, being a very transparent company and being one that is very clear on corporate governance, said it was understandable that the contracts had to be cancelled because they didn't want to be involved in circumventing U.S. rules and regulations. Then they came out and said, they picked up 2 new orders, and so life goes on, Tian. So they lost 3, they picked up 2 new ones, and the shares were down about 2% today. But ultimately, it is a shipbuilding company, and these kind of things, unfortunately, will happen, particularly with all that is going on, all that turmoil that is going on in the global markets right now.
Mr. Guo, this other counter, we talked about it just a couple of weeks ago, Singtel. Because Bloomberg News reported today that Singtel's subsidiary, Optus, suffered another outage that disrupted emergency calls. So a spokesperson said the Singtel subsidiary is investigating the cause of a now-restored issue involving this mobile phone tower site in the Dapto area of New South Wales on Saturday. What do you make of the latest developments?
It feels like Groundhog Day, doesn't it? I mean, it just keeps on going round. Well, all I can say is that if it happens once, it's a mistake. If it happens twice, it's a coincidence. And let's hope it doesn't happen a third time, because then it becomes a pattern. And I think Optus, its parent company Singtel, will have to investigate to see what exactly is going on. Clearly, there is something not right in the system for something like this to happen twice. And Singtel needs to get to the bottom of this. And I think the Australian government, the Australian regulator, wants to get to the bottom of this as well, because you cannot have something like the emergency services going down. Thankfully, this time, there were no horrible incidences. There were no fatalities. So they got away with something this time. But they really do need to get to the bottom and try and find out what is happening with this emergency services. Clearly, something isn't right here, Jen.
And if you're just tuning in, we're in conversation with David Kuo, co-founder of The Smart Investor. Mr. Kuo, across the region, the finance arm of Sony soared more than 30% on its debut after being spun off by the tech titan to focus on its entertainment and image sensor business. Any thoughts on the movements? What's bolstering investors' confidence for the counter?
Well, Aristotle, this ancient Greek philosopher, once said that the sum of the parts is greater than the whole, or is it the sum of the part is greater than the whole is greater than the sum of the parts? And he was talking about was synergy. And I think in this particular case, I think Sony has just become too big to function effectively. And when you get a conglomerate like Sony that has got so many moving parts, it becomes very distracting for senior management. And they do need to sort of look at the business and say, are we giving each one of these parts of the businesses the attention that they need? And I think what they're saying in this case is that maybe the financial arm, this Sony Financial Group, could be spun off so that they can then focus on the other parts of the business, which is the imaging business and also the entertainment business. I think it kind of makes sense in this case, because in order for synergy to work, there must be close relationships between the different parts, and there must be interactions. And I think maybe what is happening here is that there isn't the right kind of interaction and synergy going on between different parts, and it would be better if the financial group is spun off, which is exactly what happened. So hopefully the financial group will be able to thrive on its own, and I'm sure Sony will still have some interest in the Sony Financial Group, and so it will be able to benefit when the Sony Financial Group does well, but it doesn't have to worry too much about that particular arm of the business.
And in a similar vein, maybe not so much about spinning off, but we do see CapitaLand commercial C-Reit beginning its trade on the Shanghai Stock Exchange today. Units of the trust up 19.6% to 6.84 yuan at the market open. Now, at the offer price, CapitaLand commercial C-Reit's market capitalization at listing stood at 2.29 billion yuan, around 409 million Sing dollars. What do you make of the movements today?
Well, I think Chinese investors, just like me, like yield. And what we have in the case of CapitaLand Commercial C-Reit is that we have an established company, a respectable company, an admired company that is offering a yield of something around about 4.5%. When you compare what they can get there with what they can get on a savings account in China, then I think many of the investors would say, I'll take 4.5% any day. Mm-hmm. And I think they also know that possibly interest rates are heading lower in China because the Chinese economy is not doing particularly well. So if interest rates go lower and they want to lock in some higher interest rates, then I think in this particular case, CLCR could provide investors with an opportunity for them to enjoy this higher interest rate at 4.6%. I would do exactly the same. Unfortunately, the CLCR counter is only available for Chinese investors, people living in China. So I can't get hold of it, but we have plenty over here, Tian. We have plenty of REITs over here, so people should really look at some of these REITs because our interest rates are heading lower as well.
And finally, before we let you go, Mr. Kuo, this one may have some bearing on interest rates going forward. The release of key non-farm payrolls report for September due on Friday, though there are also concerns that the release of that report could be postponed by a possible U.S. government shutdown this week. What's your take and what are you expecting in terms of the payroll numbers?
Well, if the payroll numbers are released, then I would say, a figure of around about 50,000 jobs would probably be acceptable. I mean, that is significantly lower than the 100,000 jobs plus that used to be produced in the past. And it suggests that the U.S. labor market is really coming off the boil now. But that is the dilemma that the U.S. Federal Reserve is facing. I mean, it's got sticky inflation on one hand, what we talked about earlier on, and we also have a weakening employment backdrop. And one of the governors recently sort of said that this is a tricky time for monetary policy. And even Jay Powell talked about a tricky path for interest rates. So why the market assumes that there's going to be an interest rate cut, I really don't know, because I don't think even the Federal Reserve knows. And that goes back to what you were saying earlier on. If the payroll numbers are not released because of whatever goes on politically over in America, then I think the Federal Reserve could, if the numbers are not there, could just sit on their hands because the FOMC, the Federal Open Market Committee, does not do guessing. And so unless they have the data, they're not going to just simply cut interest rates for the sake of cutting them. Then again, they're not going to raise interest rates because they think that the numbers aren't there. So we do need the numbers, and let's hope those numbers are released at the end of this week.
I see. Thanks so much for the insights today, Mr. Kuo. That was David Kuo, co-founder of The Smart Investor. Thank you so much for joining us on Money FM 89.3.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.